Hello traders, we're here 2.5 hours into trading. It is February 26th, Wednesday morning. We've had huge market sell-offs the last 2 days. Let's see what the market's going to do here. We've got a little bit of a bounce forming, but now all of a sudden we're starting to see the market come in. How did I play everything this morning? Give you a quick read on it. Let's go to the daily chart very quickly. The key price point right now is the 100-day moving average, and you can see that that comes in right around SPY 316.21. The market tried to get above that a little bit earlier today, and I played that. So here's how I played it. Early in the day, I had my 1OP indicator coming in and crossing right in here, telling me that this was a good entry point for a trade. What did I do? I felt that this would be a choppy day with the market possibly closing above that 316 level. So in here, I let everyone in the chat room know that I was selling the SPY. These options expire today, February 26th. They expire on the close today. So I sold the 315.50 puts and bought the 315 puts. So that is a bullish put spread with the expectation that the market's going to close above the 315.50 level. If it did, I sold that spread for 23 cents. You can check the timestamps when you're in the chat room. That trade was very valid, and my rationale was this. I take in 23 cents. My risk on that spread is 27 cents, so roughly a 50-50 proposition. The market's been selling off super hard. We should see a bounce in here somewhere, and I expect to close above that 100-day moving average. Well, as everything started to play out, we had this nice little rally. Pete's feeling pretty good about his spread. We break out to a new high of the day. Everything looks good. I don't particularly like this long tail above body. And as I was explaining to everybody in the chat room, I don't mind this so much because these are tiny little bodied candles that can easily be erased. I didn't particularly like that long red candle. When I saw it, I said, we've backed off too far from that high of the day right here. And now I'm going to be watching to see what happens. I want to see a couple of long green candles closing on their high. I got that pattern right in here, but I wanted to see a doji here, which was fine. That candle needed to be long and green, and if it was, I'd be able to hold on to that spread, and I would make probably an 85%, approximately an 85% return on that. 23 cents divided by 27 cents. Huge return. I had a nice size position on, but we didn't break out. And this red candle was not looking so good in here. So I told everybody I got that bullish put spread loaded. I'm going to be buying it back. Am I going to leg out of it? No, I'm going to buy the spread back because option implied volatilities are so expensive right now. You have to be a premium seller. You must be a premium seller. So didn't like what I saw here. We did have a tail under body, but I needed to see us blow right through that high or I was buying it in. And I had mentioned back here, now I'm looking for a double top lower high. That's what was happening. So I bought the spread back in here, sold it for 23 cents, bought it back for 15 cents, made 8 cents on that trade, had really pretty big size on, so it mattered. 8-cent winner may not seem like much, but in this case, it actually was. But this also told me that now I need to focus on the bearish side. How am I going to do that? Am I going to buy expensive puts? No, 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 no. I'm going to use the same strategy, except I'm going to sell a bearish call spread out of the money, and I'm going to use that 318 price point, the high of the day. I don't believe that we're going to see that price point again today. So in here, I sold the 318 SPY calls that expired today, and I bought the 318.50 calls. So there's 50 cents between that spread and strike prices, and I received 15 cents for that spread. So that means I have to put up 35 cents. If I make 15 cents on that, I've got almost a 50% gain based on the capital that I had to put up, and I've got a lot of cushion, so I can let the market move around. Back in here, I could let all these 5-point S&P chops back and forth move all they wanted to. As long as that lower level at 315.50 held, I was in good shape. As long as I didn't see anything that told me that the market was going to turn into a bearish mode, I was okay on that. Same thing here. Now I've got long red candles closing on their low. I'm feeling pretty good that this high of the day is going to hold and that I'll be able to ride that spread out. If I can, I'm going to make a really nice, decent return. I'm not going to have to worry about every little tick in the market. I just have to watch specific price levels. As I did this, I also took profits on stocks that I like, and I'm going to show you the stocks that I like today. And I also got short two stocks. So as soon as the market started to shift and it told me what the direction was going to be, I shifted gears. I use stocks as a surrogate market position with relative strength and relative weakness. That gives me extra cushion and a higher probability of success. So that is how we do it. We have an enormous edge trading stocks. Those of you who just want to trade the S&P 500, you better be dang good at reading the market and at trading it to make money consistently. However, you can use that same market analysis and use stocks as a surrogate market position and do much, much better, even get the market wrong and still make money. So everything has to start with the market. You hear me preach that day in and day out. So from a day trading standpoint, here are the stocks that I like. I could go through all my searches. I'm going to show you a really nice one that I had early this morning. It came up on one of my searches, and it was NVAX. I got long here right on the open after I saw this long green candle closing on its high. I had a target in to sell it at $9.95. Hit that target on the way up. Oh, gee, but look, Pete, you missed it. It went up to 11.20. I don't care. That was a huge winner for me. I'm out. And then look what happened to the stock afterwards. Actually, it looks pretty good in here right now. I like this double bottom right in here. That is attractive. Well, what do we do with that information? We click twice on that bar. It's already through that price point. So I was going to set an alert there so that I would get a pop-up, but we're already through that price point. With the market pulling back and the stock holding up pretty well, I think NVAX looks good right here, right now. I would probably be tempted to take a long position in it, but I don't like what I see in the market, so I would be tempering any long positions. Let's take a look at the daily chart on NVAX. Any of these stocks that say that they're coming out with a vaccine or that it'll be ready soon, they're going to be hot, they're going to fly. Got to be very, very careful trading them. You can see this horizontal breakout right in here. I do like the stock in here. I think this could be a good one. So only because it is coronavirus related and that they have a vaccine that they're working on, might this stock buck the trend and move against the market. Look at the market start to come in. I told everybody in the chat room I'm going to be recording. I got a lot of good lessons to show here. So here's what I'm going to be doing. Here's my game plan for everything. So they already know what my stop is on this trade. It's at 317.50. If the SPY had gotten above that point, I would be buying back that call spread and moving on. I've got a couple of other longs that I'm going to show you. First, Microsoft, really good relative strength yesterday. Let's take a look at that stock and see how it shaped up yesterday. And you can see how the market sold off big time, but Microsoft was able to hold its own. Now the market made a new relative low yesterday, which that would be the relative low on Microsoft, and the market was down to the 100-day moving average. But look at how far off of that 100-day moving average Microsoft is. It had really good relative strength yesterday, and that's why I liked it as a long this morning when the market started to go higher. We bought it, sold it, made my profits on it. ARWR was another stock that was coming up on our searches. It had heavy volume and a bullish engulfing pattern forming after a big, deep sell-off. And look at that stock hold up well right now. We'll put up that 1 OSI indicator. Orange line above 0 means that the stock is strong relative to the market. Love it. Look what the stock is doing. It's holding its own. Look what the S&P 500 is doing. It's selling off. So here's the point to be made. If you're in the right stock and the market throws you a curveball, you can weather the storm. Look at this sell-off's been going on for about a half an hour. Look, this stock was still up here. I had plenty of time to try and exit the trade without getting my head handed to me. If I'm wrong on the market, I'm going to lose money. If I'm wrong on the market and I'm in the right stock, there's a very good chance that I'll be able to get out, scratch the trade, and get myself on the right side. So can't emphasize this enough. Stocks have a tremendous, tremendous, tremendous edge. If you're a day trader, even a swing trader, you've got to learn how to identify relative strength and how to trade it. That's why we're so successful. That's our edge, and we work it all the time. Enough lecturing. Let's go into that daily chart. I'll show you why I like AWR ARWR. So here's the formation. We've got this long red candle closing on its low. Today, we've got the stock trying to put in a bullish engulfing candle, which would show that there is longer term support on this. Heavy volume also. Boy, the market's starting to come in right now. I'm happy, but I'm not. I'm happy because I got my bearish spread on, but I'm not happy to see a lot of panic in the marketplace. IOVA, another biotech company we've been trading. Look at that. Closing on the high. Another one. Take a look at it today. Some really nice. This breakout was excellent. We caught that. We've had traders identify this early in the chat room, so they've been on this one since that new high of the day. It's been heavy volume. It's been on our list. So IOVA also looks good. SPCE came out. That's been such a hot stock. It's been able to hold its own. This looked really good. Good relative strength. It announced earnings. Losses, I should say, after the close yesterday. But usually a stock like this that's been parabolic is going to give those gains back very easily in a disastrous market like we're having right now. This tells me, you know what? This stock actually has buyers. This stock might continue to move higher. Let's go to the short side. This is what I shorted. Anything to do with travel, and you've heard me say this the last few days, it's getting nailed. I am short UAL. Want to see what that's doing. I'm shorted as of about 20 minutes ago. Oh yeah, that's a nice one. So I'm short it right here around the 69.20 level. Oh, it's getting hammered. We're also going to take a look at EXPE. I showed you that one yesterday, Expedia. Oof. Boy, I just put that one on about 20 minutes ago also. As soon as I put that bearish call spread on, I shorted the stock also in the chat room. So that stock also is getting hammered right now. So those are the shorts that I like today. And I think that overall, if you take a look at what's happening in the market, you've got to really stay on the sidelines if you are not a day trader. This is a good time to evaluate the price action. Don't panic. If you're a long-term investor that's had positions on for a couple of years, I don't think you need to panic out of anything just yet. I think that calmer minds will prevail. There are some vaccines that should be coming to market fairly soon, so breathe easy. If you're a swing trader, you've probably already taken your hit. If you were really bullish, and that was part of the problem, was the bullish sentiment was at extreme highs. If you've already taken your hit, take your lumps, learn from the lesson, and try to move forward. We're going to have a really good opportunity in probably the next, I would say, month or so to start looking at some long positions. But coronavirus is going to get worse before it gets better. So, want to go over EXPE very quickly. We had that horizontal breakout. This is support. Had the earnings after the close. Stock rallies up. The 200-day moving average was right in there. Stock backed right off of that 200-day moving average. Couldn't get through. Gaps down. Now it's below that horizontal support. That's what makes it such an attractive short. I had mentioned this yesterday in the video. Can't remember the other stocks that I had in the video yesterday, but these plays that I showed you today will be good for today. They should be good this afternoon. They should be good tomorrow. So these are the shorts. I am looking at the market to really come in. We're probably going to challenge the low of the day from yesterday. These are long red candles closing on their low. This is very heavy selling momentum. You can see the 10P indicator is telling us that the tendency is going to be to continue to go lower here. So I would be very careful. Support is at that $312 level. Let's go into the daily chart. You're going to see the 200-day moving average comes in right around the 305 level, and we'll put that up very quickly, and you can see 304.22 is the 200-day moving average. Will we get there today? Probably not. No. Could we go down and maybe take out the low from yesterday? Yes. Could we get down to maybe the 306 level? Yeah. And we're starting to get some panic selling in here, and that's what happens when you get these waterfall events. So we had extreme bullish sentiment. We had asset managers who were not buying any kind of protection. Well, how could I say that? How can I know that? If you look at the option implied volatilities, they were at historic lows. When they get down to historic lows like this, that tells me that asset managers are not buying any protective puts. They're completely unprotected, and as soon as the market throws them a curveball, they're running out to try and hedge their positions. They're shorting the S&P 500. They're buying out of the money puts, and once they do that, it fuels the fire because now everybody's scrambling to recover, scrambling to protect. Some investors are going to bail on the market after a huge 3-year run up. They're going to take profits. Asset managers are going to have to sell so that they can meet redemptions. So we could also see some margin calls come in here. This is a big, big market decline. I am not trying to cast fear. I'm not a fear monger. I'm trying to tell you what's happening in the market and how we're positioning ourselves as traders. I am not doing any swing trades right now. If I were taking a swing position, I would be doing it only on an overnight basis and only if I had pretty big profits in that position and I were looking for follow through the next day. So right now, EXPE and UAL would be candidates for me to hold overnight if the market closed on its low again. So, but I'm be tempted to take big profits today and keep myself liquid and in cash so that I can constantly evaluate what's going on in the market. Now, I've caused a little bit of confusion with my website. I'm sorry for that because I've got a lot of people wanting to try Option Stalker. I don't really have it available for everyone. I will just say that if you're interested in trying it, you must have an account with Ameritrade, Interactive Brokers, or Trader Brokerage to try it. So, and if you do have an account with one of those brokerage firms and you want to try Option Stalker, please come to www.oneoption.com, click help, and I'll help you get set up with a trial. I do also offer my research for $29 for your first month. So you'll be able to see exactly what we're doing in the chat room and you'll get excellent searches that will show you the stocks that you need to focus on. So be calm if you're a swing trader. There's going to be a great opportunity for us to get long. If you're a day trader, be nimble. Thank you so much for watching. Please subscribe to this YouTube channel. If you like the content, give it a thumbs up. Make sure to turn on your notifications because I post these videos every day. They will have actionable trades and education. So I hope you've been able to learn a little bit about day trading and the patterns that I look for. Good luck. Hang in there. We'll see you tomorrow morning. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.